Welcome to Incentive Pride, where we decode policy shifts shaping Nigeria's economic future. I am Olarinwaju Salau, and today we'll be unpacking the sweeping changes to capital gain tax under the new Tax Reform Act, which takes effect 1st of January 2026. These reforms are not just technical, they are transformative. They redefine how capital transactions are taxed in Nigeria, and the implications are far-reaching.
Let us begin with the basics. What is capital gain tax and why does this matter? Capital gain tax is a levy on profit from the sales of capital assets like shares, real estate, digital assets. Historically, Nigeria was at 10% capital gain tax rate, but now in 2026, with the reform, we are moving to a more progressive structure. From the House of JE, I am Isaac Jennifer.
So now let's take a look at the key changes to the Nigerian Tax Act with regards to capital gain tax. Number one, corporate capital gain tax rate will now be increased from 10% to 30%, aligning it with company income tax. 2. Indirect share transfer are now taxable, so offshore disposal of Nigerian-linked assets are now within scope. 3. Exemption threshold for share sales will be raised to 150 million, provided gains don't exceed 10 million. 4. Small companies with turnover less than 100 million are exempted from capital gain tax entirely. And lastly, individuals now pay capital gain tax based on their personal income tax bands, introducing progressivity.
That is a significant shift, especially the move of tax offshore transitions. Clearly a pitch for transparency and revenue expansion. Who is impacted? Firstly, we have the private equity firms. Secondly, we have the multinational groups. And thirdly, we have the high net worth individuals. They are directly affected. What should business and investors be doing now? Firstly, they need to review holding structures, especially offshores, that's the SPVs. Then secondly, they need to model exit situations to understand tax liabilities. Then thirdly, they need to engage tax adversaries early. Compliance and planning will be crucial. To wrap up, this reform is a bold step towards modernizing Nigerian tax landscape. Indeed, it's about broadening the tax base, combining advances and aligning with global best practices. But it also demands a proactive planning for stakeholders. We sincerely appreciate your time and engagement. To stay up to date with the latest insights, incentives, and opportunities, be sure to follow JE Consultancy across all our social media platforms. Bye.